I'm not sure if I can. I don't know.
Can you hear me?
We're all quiet right now.
Yeah, we're just waiting for everyone to get in here.
Dante, I don't know how to turn on the camera.
All right, give me one moment. Can you guys see the presentation here?
Yeah, I can see
Yes.
it.
Okay, wonderful.
Who can hear me? Who can't hear me?
We can hear you. So I probably will have you guys mute your mics while we get started, just so everyone's not echoing in each other. But if you can turn your video on, like I said, do so. That'd be great. Try to get situated here.
Somebody was asking about how to turn the video on. It's on the bottom. There should be a video option.
Get the chat going here. There it is. They might not have the chat available, which is fine. Alrighty. So we're going to go ahead and get started. I'm going to introduce myself. I'm going to have DJ introduce himself as well. And then what we're actually going to do is we're going to go around the room. I'll call you guys out. Just a quick 10 seconds, who you are, where are you from, and what your involvement is with real estate. So as many of you guys probably already know me, my name is Dante Belmonte. I am a real estate agent in Syracuse, New York. I have a small portfolio of small multifamily properties, and I am a real estate syndicator. So we buy and reposition multifamily assets. I'm currently right now in North and South Carolina, so right on the border there. As my partner DJ and I, we've spent the majority of this week so far and moving forward, walking apartment communities, apartment complexes. So we've had a good week so far. DJ, you want to go ahead and introduce yourself?
Yeah. So first of all, what I want to say is it's great to have Dante here. It's the first time, believe it or not, I was at his wedding last March, right before the whole COVID shutdown. So when Dante showed up earlier this week and I got to pick him up, he goes, "You realize this is the first time like we've seen each other in person," which to me is really amazing. And, you know, you credit the power of technology, right? And it's also what's allowing us to meet today. And because it is a meetup, we really wanted everybody to, you know, if you're here, you're interested in real estate in some way, shape, or form, and we're all at different levels. So as we do go around and do the introductions, we really just want to encourage everyone to, you know, state your name, like Dante said, where you're from, and just, you know, tell us something that you're looking for real estate wise. Is it a need? Is it a service that you can provide? You know, whatever it is, or if you're just interested in learning more, that's fine too. No judgment.
No
right?
judgment.
It's something where we're all here because we want to help each other out. And, you know, I came out of industry, so this is my little bit of a background. Certainly I worked on teams, but since joining real estate, it's like nothing I've ever seen before in terms of the collaborative effort that's required. But you have to make it known. The people that are successful are the ones who are willing to talk, the ones willing to network, because it does take a team and we can all help each other out. Awesome. So with that.
Yeah, we'll kick it off. So like I said, I'm going to do my best to go through everyone, say your name. If you want to unmute yourself, just let us know again who you are, where you're from, and what you're doing real estate wise and what you're looking for. It's a safe space here, guys. No one's here to judge. We're all at different levels. You know, I started from the bottom. I started with nothing real estate wise, and I've worked my way up. And I know a lot of people in here have done that as well. Some people are just getting started. So, you know, we're all here to learn. Stacy Berry, I'll have you go first if you want to go right ahead.
Yes. Hey, everyone. My name is Stacy Berry, and I am a licensed North Carolina and South Carolina agent, primarily residential. I have dabbled in some commercial stuff, but very, very light. And I have been in the real estate industry now for 3 years. I came from Bank of America. I was there for 9 years, and so kind of switched careers. And I've really enjoyed it so far. And I am here because I'm really interested in I'm just intrigued. I've always liked to challenge myself and learn more. And so that's what's brought me to this place.
Awesome. Thank you. Mark Lewis, if you want to go ahead.
Yep. Hold on one second. Hello, can you hear me?
Yes. How are we doing?
Okay. Hey, how you doing? My name is Mark Lewis. I'm a real estate investor as well. I have a small portfolio in Rochester, and I'm starting my journey in Syracuse. So I'm just here to connect with some other like-minded investors and learn and see what I can learn.
Great. Awesome. Thanks for joining us, Mark.
Yeah.
We've got Austin Treglia. You want to go ahead?
Yeah, hey guys. So my name is Austin. Currently living in Albany, New York. I'm actually interested in real estate because of Dante. We actually grew up together, went to the same high school. So that is mainly why I'm here, but I'm looking to purchase my first FHA property so I can live in a unit and then rent out the rest. But then as far as that goes, I'm mainly looking to syndicate simply because I have a very time-consuming day job. So I'm looking for something that's more a little hands-off, not looking to actively manage multiple tenants. So
Awesome. We're going to connect with you after, right? Shady, Ibrahim, I believe. Ibrahim. We'll give you a minute, and if not, we'll just go to the next person. All right, we'll circle back to you. Brian, are you with us?
I'm here. How you doing, Dante?
I'm doing well. How are you?
Good. My name is Brian Caruana. I've been in sales or sales leadership roles for the better part of 25 years. I currently have a day job and looking to transition and supplement, diversify with multifamily houses. I executed my first one with Dante in November, and actively looking for a second property, primarily for cash flow opportunity.
Awesome.
Buy and hold.
Yep, very good. Brian Cavalier.
Hey, I'm Brian Cavalier, Syracuse, New York. Currently living in a duplex, house hacking it right now, off of the FHA loan, like Austin was kind of talking about, and hopefully going to be closing, or we have a closing date February 5th for me to move out of the duplex, and Dante's my agent for that. So hopefully closing in the next 2 weeks, and just kind of taking it property by property right now.
Awesome. Glad to have you, Brian.
Good stuff.
We've got Connor Schwartz.
Hey, my name's Connor Schwartz. I'm from Syracuse, New York, but I'm currently a junior at Utica College, where I study construction management and entrepreneurship. I'm currently studying for my real estate license, and I'm just looking to learn more and get into the investing world.
Awesome. Glad to have you.
A lot going on. Awesome.
Yep. We've got Dave Rivers. Dave, can you hear us?
Yes,
Okay, there we go.
it's Dave Ravis.
Oh, what's going on, Dave? Do you want to tell us a little bit about yourself?
Mr. Rivers?
No,
Yeah, Mr. Rivers.
Dave, Three Rivers, that's where I live by.
Oh, there you go. Okay.
Brett, just a passive investor, day trader, sales rep, own a few homes, vacation rentals. That's about it.
Awesome. Thank you. Drew Dunlap.
Hi, I'm Drew Dunlap. I'm actually in a very similar boat to Connor Schwartz. I go to school with him at Utica College. I'm from Vermont. I'm also majoring in construction management with a minor in entrepreneurship.
Awesome.
I'm just looking to network and gain some more experience in the real estate industry.
Nah, he never goes on.
Awesome.
Great to have
Welcome.
you.
Yes. We got Gavin. I don't have a last name, so Gavin, I hope there's not two. Gavin, if not, I'll come back to you, Gavin. For you guys that are coming up, let's try to keep it to 10 seconds just so we can move along. I've got someone next, HH. That's your username on here. I'm not sure who that is. If you want to unmute yourself, introduce yourself.
Hi, Dante. I'm with BVH Holding LLC. We're doing a few deals with Dante right now. Hoping to close this week or next week. You know, we're right at that crunch point. We're just looking to get into the market some more. We've done some stuff in the past, took a break, but now we're getting back in and we're ready to roll.
Awesome.
And just to say, Dante, I know you want to keep the time short, but I'm hearing a lot of good connections so far. And I don't know if you have somewhere people can like exchange cards or get to, you know, because I just put it out there. A lady, I don't remember her name, Stacy, I think was from North Carolina, South Carolina. We're right now looking to do some deals in that area also. Maybe we could work together. Thank
Okay,
you.
yeah. I'll try to help you out with
We'll make sure
exchanging
you
info.
connect.
Yeah. Even if you guys
Alright.
want to put info in the chat as well for others to see. So Herman, thanks for stopping in with us.
All right, thank you.
George Dweed, how we doing? Mr. Dweed, you with us?
Good. Hey, everybody. My name's George
There we
Dweed.
go.
I'm a high school band teacher. I have a couple singles and a duplex. I'm looking to burn more of those, and we're actually looking at writing a letter of intent on a 25 unit tomorrow or Thursday, which is pretty cool. So, yep, live outside of Syracuse and work with Dante on a house that we got rid of this past fall. So thanks for that.
Yeah, of course. I've got John, Jon, with no last name on here.
Hey, Dante, John Samluka here.
How we doing?
Good. So my name is John Samluka. I'm from Syracuse. Currently own a duplex in the Strathmore area for anyone's familiar with Syracuse. I also started a dumpster rental business, which kind of got me out of the flow of real estate for the last few months. So I'm trying to get more relevant. Actually just got a contract on the house, so we're selling that. So we're, like I said, just trying to stay relevant and trying to figure out what next moves are.
Awesome. Nice to see you, John. We have Kristen, iPhone 11.
Really? Is that how it comes up?
It is, yes.
I am Kristen Smith. I live in South Carolina, and I've been a private money lender for 2 years, and I'm an investor. I have a day job, and I'm interested in learning more about your business.
Awesome. Well, thank you for coming. We've got KR Johnson.
Hi, I'm Kristen Johnson or Kristen Cox and my husband. We're in Charlotte, North Carolina. We each have a single family rental, but we're really looking to actively pursue multifamily and, instead of just passively having the 2 rentals, be a little more deliberate about it. So that's why we wanted to join the meeting.
Awesome. Thank you for joining. Marianne Cameron.
Hi, I'm out in the Finger Lakes part of New York State in between Rochester and Syracuse, for anybody that doesn't know. I own a few multifamily units, just closed on 6 more doors today.
Congrats. Awesome.
Thank you. So just looking to expand the portfolio. So that's why I'm here, and thank you.
Awesome. We got Michaela, MEK.
Hi, it's actually Maureen, stuck under my daughter's name. So
Hi, Maureen. How you doing?
I'm super excited to say that I closed on my first house, single family that I live in right now with Dante this month. So that was really exciting. I have a day job. I'm actually a nursing home administrator. So I've been through COVID in my building, and I'm really looking to get intentional with moving into investing and into real estate. The interesting thing about nursing home, being an administrator, is that part of that business is real estate. We need to keep our occupancy up. I'm responsible for physical plant, making sure that all that runs well, along with maintaining occupancy and selling, obviously selling our services and our facility to potential people looking for long-term care placement.
Great. Awesome. Congrats on the new house.
Thank you.
Nicholas Sauls.
Can you guys hear me?
Yes.
Yep. Hey, what's up, guys? Nicholas Sauls here. I'm actually in the car business currently. That's why I work a lot. I recently met Dante probably about a month ago. So I'm just here intrigued, wanting to learn more, and hopefully get into a duplex here pretty soon. So fingers crossed.
Thank you for coming.
You can do it.
Yep. Rob Greer, sorry.
Hey,
Rob, he's still
this is Rob Greer. I'm a multifamily broker in Charlotte, so a little technically challenged, and DJ gave me a great tech tip yesterday, so I could use you here tonight, but I'm enjoying listening in. Thanks.
Awesome. Thanks for coming in, Rob. Scott Hastings.
Hi, guys.
Scotty, how you
Hastings
doing?
from New Jersey. Hi,
Old high
DJ.
school friend of mine.
How's it
Good to see you.
It's very good to see you too, DJ. I've been waiting my whole life to give you my money so you can make more money with it. So that's why I'm here. It's about time.
Hey, I knew you'd be one of the wealthy ones, so that's why I stayed
That's
friends
it,
with you.
right? Somehow. I mean, I married well. I know that. So
Great
in
to
the
have
same
you.
position as you, DJ, I read your Facebook post and it's the same thing we've been doing. We pulled money out of the equity markets and I've been buying just REITs, you know, on the exchanges, and I figured I'd listen in and see if it's a fit.
Awesome. Great. Appreciate it.
Thank you for coming. Nice meeting you.
Nice meeting you too.
Shady Ibrahim. Think we oh, there we
Hey,
go.
my name is Shady Ibrahim. I'm actually in the car business. I'm a finance manager for a large auto group here in Syracuse. Just had a newborn baby. I have one single family right now, and I'd love to buy more. I mean, I've just been dumping money into the stock market like crazy, and I'd like to see. I was reading a bunch of your posts on Facebook, and I'd like to see what that's about and get in on it.
Awesome. Thank you so much for joining.
Thanks, man.
PC. It's the name I got in here.
How you doing? Teddy Lewandowski, real estate agent in Syracuse. Haven't had the pleasure of doing a deal with you yet, but I've done a few with your dad. I'm also a big investor. I've flipped a lot of houses. I've got rentals, both family and single. Work with a lot of investors, know this area well, what I was hoping to do. And we've had some conversations, but, see what you got going on down in the Carolinas. I have a lot of friends down in Charlotte, and probably, my next step in expanding would be, I know this market, but I want to try to get into some other markets, Carolinas, maybe Florida, some places where I can, get the heck out of here during the winters and go make some money.
Awesome. I love it. Teddy, nice seeing you. We'll do a deal together soon, I promise.
Oh, no, we definitely will.
Ben Stith.
Hey, guys. I'm a loan originator over with Hunt Mortgage. I work not alongside Dante, but across town from Dante. Been in the business for, going on 6 months now, networking, and I do have a couple of one rental property that I'm trying to make a little bit better than it is right now.
Awesome. Cool. Thanks for coming, Ben. Anyone else that I didn't get to, if you want to unmute yourself and go right ahead, please. If not, we'll get started.
And I think the order there was based on entry order. It wasn't really alphabetic.
Exactly.
You did a good job keeping track.
All right. And also, if you guys want to do in the chat, feel free to put your info in there. If you anyone in there that you heard and you want to connect with, just put their name after it or reach out to them. That's the best way we can do it for now until we get something moving. I think we got one person unmuted that we missed.
Hey, Dante.
Oh, what's going on?
Yeah, hey. Hey, sorry, I'm still on the road. It's Steven Schmidt. How you doing?
I'm doing well.
Can you see me? I don't know. Something happened. Hey, hey, Dante. Guys, my name is Steven Schmidt. I'm an investor. I'm an investor's agent in the area. It's a great area. We're in number 6 in cash flow in the country. How about that? And I got too many construction projects.
Oh, we lost him. He's driving.
The power of
technology. What's going on? I don't know, man. I'd be diversifying if I was, if I were you. So I'm doing that, and I think a lot of people are going to follow suit. But we got a great area here, and we sold that golf course, and now it's an Amazon. So hopefully we're helping people's values in the area. And thanks, Dante, for the. You get a lot of people on here today, huh?
I know, and thank you, because it's sold your golf course. I get my Amazon packages the same day now soon.
I know, one day.
We do miss the golf course, though.
I know, believe me, me too. Me too. Bittersweet.
Awesome. Well, thank you guys. We're going to get started. That took a little bit longer than I thought, so I'm going to try to get started in the first part pretty quick. While we're presenting here, we won't be able to see the chat, so just kind of wave to us because we can see you guys, but not the chat. So let's see. Can you guys see this presentation? Give me a thumbs up, shake of the head, nod of the head, all that good stuff. Okay, awesome. So Victory Capital Group, we are a multifamily investment firm. We acquire value add multifamilies in the North and South Carolina region. That's where I'm at now. Disclaimer, blah, 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 blah. Talk to your financial advisor.
Let me take this one. Basically, what we have to tell you is you should always seek good counsel, good advice from your CPA. We're not here to convince or do anything other than educate and share what we know and have everybody else share what they know. So we just need to make that very, very clear that we're not offering investment advice at this time.
Very good. So we already introduced ourselves. We're going to have this at the end in case you want to get our contact info and contact us. But we are considered the managing partners of Victory Capital Group. So tonight we're going to be doing private capital, raising private capital to increase your real estate portfolio. If you guys read the Facebook, LinkedIn post, you know that's what we're talking about. So the way we're going to break it down is we're going to hit those single family, small multifamilies. That seems to be very popular. It's definitely that entry level, and it's, it's where I started. So we're going to cover that. We're going to cover the syndication capital raise as well. So where we are operating at the moment, we're going to go after sources of private money. So where you can find private money in everyday life, where it's in front of you and you may not even know it. And then we're going to talk with, what you're going to be doing when you're meeting with private lenders.
Yeah. So the one thing I want to add here is we're going to approach this both from the side of somebody who's doing the lending as well as somebody who needs the money. So again, trying to pair people up and connect the dots here, but talk about the specific processes that are involved and some of the documents that are involved with doing some of this lending.
Most definitely. And, we know there's two things you guys are looking for. Usually it's deals and it's capital. We'll cover deals another night, but tonight we are going to talk about capital a little bit. I promise you, it's a lot easier than you think. So for starting tonight, we're going to start with private money. And I also encourage you guys, if you have questions throughout, unmute yourself, interrupt me. We want to hear from you. And we want to make sure you understand what we're talking about as well. So private money. Private money is capital raised from private individuals that you know personally, through friends, through family, and anyone that's not a company, so to speak. So let's say if DJ wanted to lend me private capital, I've got a flip going on. I'm a little bit short of capital. I'll reach out to DJ and I'll ask him if he wants to do that. And we go over that whole process. I mean, DJ, you even said you've done some private lending yourself.
Yeah. So the thing here actually with the private money lending is when you're going to fix up a house, in particular as a rehabber, or maybe you're trying to employ the BRRRR strategy, banks aren't going to loan on those short-term financial needs.
Right.
So there is a vehicle in place. We try to do that through one of two means. Hard money, which we'll talk about in a minute.
Yep.
But the preferred method is private money. But that does take a little bit of work to do, and you have to know the processes in place and coach people through the process, because it's not something that people do every day. I had no idea 2-3 years ago that this was even possible. But this is how I started to cut my teeth, and I think it's really awesome. Compared to the stock market, where if you do a private money loan, a stock can tank on you. You think back to Blockbusters, one of the famous examples, and you have no control over that. However, with regard to, a private money loan, you actually have a loan, just like when you take out a mortgage on your home. Well, what does the bank do? They put a lien on your property. This is the same thing, short term. That takes place, and basically you need to make sure you have a person that you can trust and put the proper instruments in place to do this. And
Most
I think
definitely.
we talk about that next.
Yeah. So, but also DJ, what you're touching on is short term. So as you can see in the bottom left, I've got flips, I've got BRRRRs, and I've got development. Those are all short-term projects that you're going to use that more expensive loan or lending option for. You're not going to put this on a buy and hold property. You're not going to put it on a single family rental. Just because the rate's a little bit higher, and we'll get into that a little bit. To give you guys an example, I did a BRRRR a little bit over a year ago, one of them I used a combination of private money, hard money, and my own personal money. And so we'll get into private money or hard money in a moment. But private money was just a simple email to someone I knew. They knew I was investing in real estate because I told everyone I know, and that's what you guys have to do. If you're going to invest in real estate, when you're, having conversations, you're, meeting each other, they haven't seen in a few months, you just let them know that that's what you're doing. And because of this, I planted the seed in this individual's head. I shot him an email. I said, hey, I think I heard you were interested in real estate a little bit. Had nothing to do with real estate, never did anything with real estate. told him a little bit about the project, and he said, here's my office address. Why don't you come swing by tomorrow at 5? I'll have a check for you for the full amount. I don't mean to make it sound that easy, but you can make it that easy if you start talking to people, nurturing them. So that's just a little bit about the private money. We're going to get into a little bit more of lending documents. So first thing you have is a promissory note. So this is kind of like your agreement. This is going to lay out the terms. This is going to lay out the interest rate, prepayment, whether you're paying interest and principal throughout the loan or just interest. An attorney's going to usually draft this too.
Right. So typical terms you would have if you're doing a flip or if you're lending on a flip, what we typically see interest rates in that 8 to 12% range, typically no points, and everything is usually paid. Usually there are no interest payments throughout the life of the loan, which is usually 6 to 12 months. Basically what happens is if somebody, for example, is rehabbing a home, they'll use your money, they'll rehab that home. By the time when they go to sell it, that's when they would pay you back. That is typically how it goes. A couple of things to note with regard to the promissory note is that it's actually signed by the borrower and should be held by the lender.
Yep.
Always good to give your attorney a copy. Get an attorney involved when you go through with these with these types of agreements, just to make sure you have your I's dotted, T's crossed. But it's really a very straightforward document. And then the other unique thing about these types of loans is just like a bank, if you have a mortgage on your home, you would also want to make sure that you clarify your lien position and pull a lien on the home that you're lending against. This is extremely important because it's going to protect you in case something happens with that rehabber, they don't finish the job and so on. Again, to avoid all those headaches, get to know and trust the person that you're lending to. And if you're the rehabber, you need to make sure that you can get the job done and be responsible with other people's money.
Yep.
But this is a great lending tool. I've done these loans at 12%, 6-12 months. I got some great people that I lend to. And it's just been a fabulous way to get some of my money out of the stock market and then use this. I know I'm secured by real estate. The other instrument that's on here is the insurance. You want to make sure that the builder's risk policy, which whoever's rehabbing the home, doing or executing the BRRRR strategy, that they add you as additionally insured loss payee on that. And basically what it does, and I've never had to execute this, but my understanding is if something happens and a check is cut, as the lender, your name is on that check. So the person that you've lent money to can't just go, burn down the house and take the bank money or take the insurance money along with it.
Yep.
Okay. So again, those are the three tools, and anybody that's borrowing money, these are the responsible things to add to your list of documents. If you're securing a loan, this is the responsible way to do it. The one other thing I'll add is sometimes people ask for a personal guarantee. Again, none of this is required. If you want to just lend somebody money.
Yeah, I want to touch on that real quick. I mean, the terms are endless. So because you're not working with an institute, a bank, there's no minimum requirements they have to meet. So for example, when I worked with one of the private lenders I was doing a project with, I didn't have any payments to him for the life of the project. I just said, okay, in 6 months when the maturity date hits, so in 6 months from when I took on the capital, all of the initial capital he invested was due plus 10% of interest on top of that for the project. So I wrote him a check at the 6 months after I refinanced the project for his initial investment plus 10% on top of that. So I wasn't making payments throughout, and that can be nice too because it doesn't affect your budget as much. You're not worried about making these payments. You're more worried about just, focusing on the project and putting capital towards that. So that's private money. Let's see here. Okay. Hard money. Hard money is capital used from companies or private lenders in the business of lending money. For those of you guys that are looking and saying, okay, who is a hard money lender? Go over to Bigger Pockets. They actually have a page for lending and you can find lenders right on there. Lima One is a pretty popular one. I've talked to some of those guys, a lot of them actually, when I was doing projects in the beginning to kind of line up that capital. And some of them didn't work out. I actually found a local hard money lender. I went to a credit union and I worded it as is, do you guys do any short-term lending? And sure enough, they did. They cut me a check for $50,000 right on the spot. I just had to fill out a form and they do not underwrite it when it's under 50. Over 50 is when they do underwrite it, and they pull credit, do a little bit more. But it was nice because it was with a local credit union. I could shake someone's hand. I knew I wasn't getting scammed that way with someone over the internet, because that does happen. And I was able to use those funds immediately for the project. So that's really nice to have.
Yeah. So where the private money loan is negotiated. So as a rehabber, maybe somebody's happy with 6 or 8%, and you can offer them 9. It's relatively cheap money. Hard money is not cheap.
Right.
As you can see on some of these bullet points, as we get towards the end, extremely high interest rates, points paid up front. The one word of caution we'll put out with regard to hard money is make sure you understand all the terms and conditions.
Yep.
On the real estate investment groups that I participate with, the number one post I see about hard money lending is, we didn't know. We didn't know we had to pay for inspections, every time we want to do a money draw. We didn't know we had to pay this fee and that fee. So just make sure before you execute an agreement and borrow money from a hard money lender that you are aware of all the terms and conditions involved.
Most definitely. And I want to hit on some of these earlier points too. So structure, these hard money lenders typically have a pretty set structure that each company or business uses. They're very similar to a bridge loan. So if any of you guys are familiar with loan types, bridge loans are basically short-term loans to get a property repositioned. So for example, I'll talk about big multifamily for a second. If a property is under 80 or 85% occupancy in the bank's eyes, it's not stabilized. You're not going to get an agency, Freddie or Fannie loan. So therefore, we'll take on a bridge loan, which is a much higher rate, but it's short term. It allows us to get in there, make changes to that property, get it stabilized, and refinance one of those long-term perm. So for permanent lending options. The nice thing about sometimes hard money, also bridge loans, is they will finance a portion of the construction costs. So as you see there in the fourth line, it says loan to cost instead of loan to value. So typically when you get a mortgage, you're used to hearing, okay, they're doing on investment properties 75 or 85% loan to value. So that means if the home is, valued at 100,000, they're going to give you 75 or 80,000 of that loan. But let's say the home's worth 100,000 and there's $20,000 worth of construction costs or rehab costs you have to do to that building. What that hard money or bridge money lender is going to say, okay, we'll give you 75 or 85% of that loan to costs. So of that 100,000 and 20,000, they're going to give you 75 to 80% of that 120,000, which is nice because you're not only paying for the down payment plus an additional $20,000 of costs out of pocket. It kind of lessens that impact and it gives you some breathing room. Interest only as well. So that's something that's really enjoyable because it doesn't hurt as much and it helps the cash flow a little bit. So let's say we do have a smaller or larger multifamily product that is rented out partially, but we have to do renovations to some of the units to bring them up to market rent, or that's part of the business plan. Being that it's interest only, usually you have a principal and interest payment on your loan, your mortgage each month. Interest only allows you to pay, just the interest only on the loan until a certain date. So what that does is you have your interest and you have your principal. But since we're only paying the interest, we're paying I'm not going to say half because it's not divided like that, but much less for your mortgage payment. That helps with the cash flow.
Yeah.
So that's what, DJ, do you have anything else to add with the hard money? I know I kind of went across that quick.
Yep.
Okay.
Yep, absolutely. Well, we had some great introductions in the beginning, so we'll just keep moving through this.
Okay. Talking about syndication. So now we kind of talked about that small multi, that single family. And again, if you guys have questions, stop me, let me know. But now we're going to kind of move on to syndication. So obviously we are syndicators. We're operators of a syndication. If you guys don't know what that is, it just means right on the screen, the pooling of capital from multiple sophisticated and or accredited investors that'll be used for the acquisition of an asset such as an apartment community to execute the project's business plan. So just think about it as a bunch of people on a plane. Not one person can buy a ticket to fly that plane out because it'd be very expensive. But when you put 100 people on a plane and the amount they're paying each, you now have enough money to take that plane and go to the same destination. It's a good analogy.
That's good. And hopefully you're going to explain some of these big words that are in here.
Yes, accredited and sophisticated. So I'm going to define these for you real quick so you understand moving forward what we're talking about. An accredited investor. So this is a person with an annual income of 200,000 or a couple of 300,000. for the past 2 years. And so they've had the income for the past 2 years, and moving forward, they they predict to have that same income, or they have $1 million net worth outside of the equity in their primary residence. So that's what an accredited investor is.
So I do want to point out that the reason why this is important is all these transactions fall under SEC rules.
Yes.
And the majority of syndication transactions that take place under an SEC exemption. But it is critically important that the syndicator and the participants understand the basics of these rules. So we're just going to cover some of these definitions. It'll help you to understand, if you're planning on being a syndicator, who you can accept money from. Yep. If you want to lend, you need to understand at least some of these basic rules. So again, I'll go back to the disclaimer in the beginning. You should always get professional advice. This is meant to introduce everybody to this. And with that, we'll keep rolling with some of these definitions.
Most definitely. And, I'm covering this because when you're talking about a syndication for raising capital, it's not like we were talking about with the private money where you just get a promissory note and get capital from them. There's a lot more to it. We're filing with the SEC. And so that's why we actually have 2 attorneys on our deals. We have our SEC attorney, and then we have our commercial real estate attorney.
And I'm also going to go back to the trust thing.
Yes.
Some of the best advice that I've heard relative to syndication or any lending you do is the relationship. We can give all the numbers. We can give all the data, all the property information, market information. If you don't trust the person that you're investing with, certainly I know I wouldn't invest with somebody I didn't trust. So it is important you get to know who it is that you plan on having to put your money work for you.
Yep, most definitely. So we covered accredited investor, 200K or 300K joint filing for the last 2 years and moving forward, or $1 million net worth outside of the equity in your primary residence. Sophisticated investor, it's really like it says on the screen. A sophisticated investor is an investor that does not meet the accredited investor status, but has the knowledge and experience of finance and business, and they can make calculated risks. They understand what's at stake for them. The reason why we're covering both those is because there's different exemptions. Like DJ, like you said, we're filing with the SEC. It's a security. So we have Regulation D, exemption 506B for Bravo, and then 506C for Charlie. And we're going to go over those differences real quick so you understand who you can raise capital for. And even if this doesn't pertain to you, maybe you think about doing a syndication in the future. This will give you a little bit better of an idea to cover that.
And I had a little fun with Dante today because I pulled up the actual regulation.
Oh my gosh.
Reading it.
He's like, should we put it in here as a joke? I was like, no one will listen.
If you ever want to have some fun, try to read a code of federal regulations.
Yeah, don't. So 506B, advertising prohibited. So what that means is an issuer is its own security. So if we're selling shares for an apartment community, we can raise an unlimited amount of capital from sophisticated investors. Accredited investors, like I described earlier, we can only have, 35 non-accredited investors. So accredited investors, I can have an unlimited amount with 506B, but sophisticated investors, I can only have up to 35. And this is so that way, if you're accredited, you're typically making 200 or more a year, you have a million net worth, you typically know what you're doing with investing. Usually a lot of that doesn't come from your job. You've done some investments on the side, so you're a little bit more savvy. So this is just the SEC's way of saying, we don't want you taking advantage of people, so they limit that number. You have to have a pre-existing relationship with these individuals too. I can't just, find you on the street and say, hey, you look wealthy. Do you want to invest in some real estate?
You drive a nice car.
Yeah, exactly. You can't do that. You have to have a pre-existing relationship. So the way I break that down is at the bottom of the screen. It's like when you were dating. You ask for their number when you first meet them. You take them out on a date. Then after a few dates, you start to get to know this person. You get engaged, and then you get married. And I kind of break those down. So you ask for their number, you meet them. You meet the individual maybe once we have these in person at an investment meetup like this. You're looking to invest passively. You're in the dating phase. So you go out to lunch, you start evaluating the person, you figure out if they're sophisticated or accredited, you build that relationship. Then you get engaged, you talk about investment opportunities. So once you figure out what this person's investing goals are, you start talking to them about projects you have available. And then you get them married. So that's when they actually send you money and you execute the deal and you guys start investing together.
And I've learned this is a really good thing. And it's a really good thing because it protects both the investor as well as the syndicator, or in the case of, somebody who's rehabbing a home, trying to borrow money. We be irresponsible to take money from somebody that is not in a good position to lend.
Yep.
So we have a responsibility, and it's actually required by the SEC rules that we actually get to know their financial situation, and be responsible with that investment. So, and again, if you're lending money out, we go back to make sure you know who you're giving your money to.
Right. So, I mean, just keep in mind, if you're a lender or you're borrower in this case, look at both sides of the situation. So that was 506B. Again, to just cover that for you guys, you can raise an unlimited amount of capital. So that means we can raise any dollar amount we want. You have an unlimited amount of accredited investors that can invest with you, but you can only have 35 non-accredited investors, also known as sophisticated investors. Everyone's going to be sophisticated because if you're not accredited, you're going to be sophisticated. So you can only have sophisticated investors. And the biggest one is you cannot advertise. So I can't go out there, post on Facebook, get a billboard and put my deal out there. It's because I have to have these pre-existing relationships with investors. So that's what the 506B looks like. Now 506C, this one's nice because it really gives you free reign with a little bit of limit. I can now advertise. I can now, get a billboard and put my deal out there and ask who wants to invest. I can put it out on Facebook. I can email blast it. But every single investor that's going to be investing with me has to be accredited. So you have to meet that 200 filing single, 300K filing joint income for the last 2 years moving forward, or you have $1 million net worth outside of the equity in your primary residence. So no sophisticated investors, has to be accredited investors.
I'm glad he used the term billboard.
Yeah.
Because I can understand that, the young people with social media, I thought he'd go there, but I'm happy for the billboard example. I really appreciate that.
Not a problem. So again, just to review 506C, Charlie, the issuer can raise an unlimited amount of capital. So both of these exemptions, we can raise any amount we want. Funds can come from an unlimited amount of accredited investors. Advertising is allowed, so I can do any advertising I want, but the investors must be verified accredited investors. And there's forms we have that verify you as an accredited investor. It's not just like we meet you and you say, I'll take your word for it. We can also get documentation from your CPA stating that you're accredited. Your attorney, I believe, financial advisor, they all can provide you the proper documentation for that.
So one of the things we don't really talk about in here is when you're doing a syndication, what can you expect? So again, I mentioned I started my career doing this in lending.
Yes.
I left my day job. I had a 401k instead of putting it back into stocks. And we're going to talk about some retirement lending in just a minute. But I invested in both a 506B and C offering. If I mess up the numbers, Dante, he's got it dialed in. But one of them was with a smaller syndication. The other one was with a larger syndication that was advertised through a real estate network. So in terms of expectations, my expectation is really on both of those deals that I am going to get paid a split of the cash from the syndication. Somewhere, it's going to start off a little lower, but as they improve the property, it grows over time. So whatever money I put in, I expect to get back in form of payments, which in a syndication is done with a cash split of whatever distributable cash they have.
Yep.
So the properties I invest in, they're cash flowing, they're apartments, they make money. When that cash at the end of every month, they figure out how much they have. There's an agreement in place that says, Mr. Smith, you own this percent. This is how much you get. Over the life of my loan, I expect those payments to be, somewhere in that 8% range. But the pot of gold at the end of the rainbow when you're doing syndications is when the syndicator goes to sell that property. They've increased the value of the property.
Yep.
They've increased the equity of the property. And these things sell for a lot more money. And that's the split you have. So my internal rate of return over the life of the project, I expect it to be between 15 and 20% of what I put into the job. Now, we're not going to go over some of those numbers, but in general, you can think about my money working for me on average over the life of the loan is going to earn somewhere between 15 and 20% on these deals that I've invested in.
Yep.
The risk is, it's not guaranteed.
Nothing's ever guaranteed.
It's not. So again, you have to trust, you have to get to know, you have to understand. And to me, that minimizes the risk. And these are awesome investments.
Not to mention the tax benefits you get as well.
Yep.
So when you're investing in a syndication, so, private investors, hard money lenders, if they're investing to you, their capital, they don't get any of the upside potential of what the tax benefits could be, depreciation, cost segregation. When you're investing in the syndication, that's the best thing about it. That's the difference between stocks and syndications. You get those real estate tax benefits of ownership because you do own a percentage of the ownership of this property, whatever the entity is, the ownership entity. So whatever depreciation the property owner is getting, like us, the operators, or the cost segregation is basically just an accelerated depreciation. Individuals like yourself, DJ, you're getting that on those projects as well.
Right, absolutely.
And then just to mention the 506B versus C again, you said you're doing one with a B, one with a C. B again is that private investing. You're doing that on the smaller project, where C for the advertised one is there's what, 300 plus units in that
600
portfolio?
total units.
Okay.
300 Dallas, 600 Austin. So, and again, I'm not saying this for any other reason. Everybody takes a different path.
Right.
I'm an older guy, right? I worked hard for a long time. We saved up. I had some money. I didn't want to keep it with my old company. And instead of just moving it to a Vanguard or something like that, I said, you know what? I like this real estate stuff. Let me try it.
Yeah. And you'll find the 506B, that private on smaller deals, because typically, you're raising capital from friends and family or acquaintances, and they're not all usually accredited. They all usually don't have $1 million net worth or more. But when you're talking about those 300 to 600 deals that you're invested in unit wise, you have bigger investors or bigger deals. They're raising millions of dollars of capital, and individuals are putting in anywhere from $100,000 to $200,000 versus that smaller $25,000 to $50,000 on that smaller deal. So enough about that for the syndication. Let's talk about sources of private money. DJ, you want to take this?
Yeah. So this one, we thought we'd make it a little bit interactive. So if you can just put in the chat, what are some sources of private money? So if you're approaching somebody who you're trying to say, hey, I got this great deal for you to invest in, where do you think they can pull private money from?
So if you guys just want to write that in the chat, if you're looking for private money, if you're going out to find it, where are some places you can pull it from? If you're an individual that's looking to lend, where can you pull that private capital from? Let's see some stuff start coming up in the chat here.
It'll take a few seconds. So
yep.
All right, we got Austin with self-directed IRA. Excellent.
Marine equity in their home. That's great. We got another self-directed IRA.
Chris Davis, very good.
I think that's it. That's all anyone wants to say. No one knows anything else. Well, we'll show them then, I guess.
All right, yeah.
Okay.
There's the obvious one, right? The uncle with a bag of cash.
Yep, most definitely.
So obviously, if somebody just has cash sitting around, the thought is you can put it to work. So a home equity line of credit, which somebody said equity in their home.
Yep.
Marine, very good. You can get a home equity line of credit for a very low interest rate, and perhaps turn around and lend that out for a much higher interest rate. The thing you want to be careful with home equity line of credit, again, are interest payments.
Yep.
So if you're not getting any interest, but you have to make interest payments along the way to that line of credit, again, just make sure you know and understand all the rules, requirements, when you have to pay it back, and so on.
Most definitely.
Personal and business lines of credit. These are things that, we don't see as often, but certainly if you have a lower interest rate line of credit, whether it be personal or business, you can lend that out. So and here's an example. My wife and I, we made a purchase of some recreational watercraft, and we talk about whether or not this is something that we've been how do I say, responsible with our money over the years, but we've always had the mindset of let's pay it off. And this time we were able to borrow at a very low interest rate. And I said, why would we pay it off if I can borrow at a low interest rate and then go lend somebody that money?
Right. School of thought, borrow at 2%, make 8%. You get the 6% spread.
It's a little bit of a mindset shift. Who's the guy that does all the teaching of get rid of all your debt? And
Dave Ramsey.
Dave Ramsey.
Which we're not bagging on here. He's a good guy, but it's just a different clientele.
He has some great advice.
Buy all your real estate in cash.
But he won't teach this this type of investing.
Yep, this investment.
Very responsible. We like him and everything like that. But certainly, if your money can make money, that's not a bad thing as long as you get yourself involved in the right areas. So liquidated securities investments, that means you would have to liquidate a stock.
Yep.
Or if you owned a rental property and you said, hey, look, I don't want to be a landlord. I like this syndication thing, has a lot of the same benefits. Let me go do that. All the work without, or excuse me, all the benefits without the hassle, I should say.
Right. Liquidating your Bitcoin, you just see it going up. You want to get rid of it. Something else you can do.
There you go.
Or even the syndication method doesn't work for you. You still want to lend your money. You have that private money avenue. You don't want your money locked up for 3 to 7 years in a syndication. You can push that over to a private lending, private money to someone else, another active investor in the marketplace. And, you get your capital back in 6 months. That's another option.
So let's, so somebody had mentioned self-directed IRA. So again, when I moved my retirement out, I put some of it into a self-directed IRA. What is it? It's literally, and we'll talk about it.
Yeah, we'll get it in the slides.
So why don't can we go to the next slide?
Most definitely. Oh, I'm on there we go.
Okay. So what's the deal with a self-directed IRA? It has to be administered by a custodian. So there are custodians available out there. I've used Equity Trust. There's also Provident Trust, IRA Services Trust. These are companies that allow you to self-direct your IRA. So here's a question for you. And again, we'll look for the right answer in the chat. If you're self-directing your funds, what's the difference between being in an IRA like Vanguard that has, a choice of funds versus you making the decisions for yourself because the custodian doesn't offer investment advice?
Right. So they're more like the mediator for your money
Mhm.
is really what it is. But what you're going to do is you're going to select your investment. So, it's pretty cool to have the option to invest your retirement account in real estate. So you say, I'm putting that 6,000, what do we got here?
I'm looking
Wills
back
in
at
the
some of
state.
the other answers. Scotty has, I think this was back on where can we get money from cash value of life insurance.
Oh, okay. Yep. There you go.
That's a great one. And the lovely Mrs. Smith, who happens to be my wife, said savings accounts. I think that's the bag of cash. Bonus earnings. Hopefully we have plenty of those. Beneficiary of wills and estates. That's a unique one. That's a great one.
Yep.
So back to the self-directed IRA. What I'm looking for is if you're making those investment decisions, there's going to be more risk associated with them. Okay. So that's a potential downside. If you don't know what you're doing, you're playing with your retirement. So just make sure you get educated and get wise counsel. Some of the other highlights of these, and I want to make sure we don't run over on our time. So we're
Okay. Yep. Just about 8:30, somewhere in there, just some time to ask some
we
questions.
want to allow some questions.
Yep.
So, but also give you the content. There are limits on contributions. So right now, currently IRA accounts, $6,000, 7 if you're over 50 years old, if I have my numbers correct. But the neat thing about a self-directed IRA is it does allow you to do things like invest in real estate, but there are prohibited transactions. So for example, you can't, if you buy a property with your self-directed IRA, which you're allowed to do, you are not allowed to occupy that property. And you also cannot have a disqualified person occupy the property. Who's disqualified? Your parents, your kids, anybody in your direct line. So brothers and sisters are actually okay. Aunts and uncles are okay. And there are also certain business partners, and I don't know what those rules are, but they are all disqualified persons. And if you do that, you can potentially lose your IRA status. If the government finds out, they'll call your money due and you're going to owe taxes on your IRA.
And that defeats the whole purpose of the IRA.
Exactly. So the other thing is you can't invest in collectibles. So a rare painting, coins, things like that, those types of investments are not allowed out of your IRA, but you can invest in real estate. One of the syndications that I invested in is actually done through a self-directed IRA.
Right. So, I mean, it basically just means if you've got a boatload of money, let's say $100,000, $200,000 in your retirement account, your Roth IRA, and you want to invest in real estate, but you don't want to take it out to take on all those penalties, all those taxes, you can invest right through self-directed IRA. And I've got an episode on my podcast. I forgot what number it is. 2 of them actually talking about this. I have custodians on the show. We talk about what you cannot do with the self-directed IRA. It's a very, very cheap alternative for investing. It's not very expensive fees wise to do it. So it's very nice. And, something like this is good for syndication because you can't touch it until I believe 59.5 anyways.
That's right.
So why not just let it hold in there for long-term investment syndication?
Same rules as an IRA. You have to begin withdrawing by 70.5. You can't begin drawing till you're like 59.5. Prepayment penalties and all that stuff still applies. This just allows you the freedom instead of being limited to whatever a Vanguard provides. And I love Vanguard. I think they're a great company. I've done business with them. Great for being low fees, but they do limit your options and don't allow the self-directed option.
Yeah, just a quick little story. So a buddy of mine, he has, his self-directed IRA, and his buddy also had one. He wanted to use money out of his own retirement account, but obviously, well, not obviously because we didn't tell you this, but you can't lend to yourself on your self-directed IRA. So you couldn't go and buy a rental with it.
Right.
That's not allowed.
Right.
But what my buddy did is he had another buddy that had a retirement account. They basically swapped $50K each. He lent $50K to his buddy out of his self-directed IRA and vice versa. It's really your own money. It's just whose name's on there. So there's always a way to get around it. Legally, that is too.
Yeah.
So it's not like anything fishy going
So
on there.
again, with regard to the investment advice, these prohibited transactions, these are the common ones. They are, it is not a comprehensive list, but we're hitting the highlights for you.
We had a question here. Are you able to buy a property with a self-directed IRA, use the cash flow to buy more properties and remove yourself from having to hold the additional properties in the IRA? It sounds like, are you able to buy a property with a self-directed IRA? You can't buy your own. You can buy someone else's, but you can't invest in your own.
Correct. But if you buy a property and you're getting, how do I say, rents
cash flow
from
coming
that
in.
property, you got cash flow coming in, that all has to go back into your IRA.
Yep. So same rules apply like your IRA. Any investment that you're making positive cash flow from it, any capital coming in, you can't touch it. So Chris, that was a good question, actually. So again, just to reiterate, you can't lend on your own property and you can't touch any cash flow that's coming in. It's got to sit in your retirement account like normal.
So again, I'll just go back to, I'm not a CPA, I'm not a tax consultant.
You're an engineer, right?
This is my understanding. I am an engineer. That was my former life, but with this, always good to double check these things with your CPA, your tax person, and so on.
So self-directed IRA, let's go over to Solo K. I'll let you take this. I mean, this one's really interesting because it's pretty powerful too. So if you want to get into that a little bit.
This one here is for people that are self-employed. So a sole proprietor, a freelancer, I'm trying to think of some of these other definitions I have in here. An independent contractor, a small business owner without employees. You can
independent contractor is a huge one. Real estate agents. I know we had some on here. That's pretty big.
So what's really great about this is just like your company has a 401k plan. And sometimes I refer to it as a solo K. These are also referred to as a solo 401k. So essentially the same rules. The big highlight in here is that third line that's in there. The contribution limits are huge.
Yep.
So if you have income that you can defer from a tax standpoint, you can really use this to your benefit, especially if you start investing out of this account.
Well, let's go back and forth on Roth IRA, or not Roth IRA, excuse me, self-directed IRA versus solo K. I mean, that third line, like you were saying, you can only do 6,000.
Right.
And an IRA, that's not that much annually, especially if you're in a decent
But you can roll money in, right?
Correct.
There's no limit to rolling money in.
Yep.
But yeah, in terms of your contribution limits, 6,000 versus 57,000. The catch-up plan, if you're over 50, applies to both, and there is a cap on 25%. That should probably say of your earnings. So a really powerful tool. Now the difference is, self-directed IRA really easy to set up. You go to the
one of the custodians.
The custodians. Yep. Thank you. I told you I wasn't going to be able to come up with
I know you said that earlier.
For some reason I have a mental block on custodian. But you go to the custodian, just like you're applying for a bank account, you fill out some forms, you pay a fee, and you're off and running, and they'll be happy to help you direct your money or help you hold your money while you self-direct it.
Yep.
With regard to a solo K, it's the same thing as if you're a business starting a 401k plan. And there are attorneys out there that will help you draft these plans. So the setup is a little bit more extensive. It is held by a custodian. If you want to get really fancy with these, also get checkbook control.
Yep.
So you don't have to, how do I say, approach.
It's exactly what it sounds like.
You can provide immediate
it's a checkbook,
cash, right?
Really,
You
from your
literally
account.
can write it out of a bank account The bank account is actually owned by your solo 1K. It provides investment flexibility, similar rules to a self-directed IRA, and the prohibited transactions also apply. So I have a solo K. I will say I rely upon experts to guide me through the process. I do know what I can and cannot do. What I have done is I've done some private money lending out of my solo K to people that are rehabbing in Charlotte. I've invested in a syndicated deal out of my solo K. So those are allowable transactions. I'm not living in those homes. I don't occupy them and so on. So you can essentially self-direct those funds in your account setup. It would be good to have a discussion with your attorney or whomever it is that you're helping draft this document as to what it is that you want to do, so you don't limit yourself on whatever options it is that you want to execute.
Right. I mean, just to touch on fees a little bit, I'm not going to give out exact fees for these vehicles, but think about it like this: get your self-directed or your IRA. You're usually invested with a Vanguard or Fidelity. You've got fees. When you're talking mutual funds, ETFs, you've got someone that's managing your money for you, paying fees. I'm not going to say high fees, but they add up over time.
Sure.
Versus when you're investing in real estate, you don't have those fees.
You don't have those fees. You do have
a setup fee,
account fees,
Yep.
right? There's
Very
there's
limited,
an
though.
annual account fee. They'll help you provide tax forms that you're required to file and some things like that. They'll get you for some transactional fees if you send a wire or something, similar to a bank.
Yeah, and we say all this. The reason why we're talking about IRA, solo K, is because if you're looking for private capital, you're talking to individuals. I don't have any cash on hand. I only have it in my retirement account. Talk to them about this program. Send them an article on, IRAs, self-directed IRAs, or solo Ks. They're most likely, if they're talking to you about real estate, they're also very interested in getting involved in real estate. So, we're talking from the borrower side. You're talking to individuals who have money in their retirement account. They want to put it to use in real estate. They're tired of the ups and downs of the stock market, as it doesn't affect as much in retirement because you're not liquidating that, pulling it out. But that's another way you can get capital from people. Find out who's got a good retirement account. Find out who's worked at, a nice company for 40 years that has their 401k built up. They have some cash in there. Those are some people you can approach and target, even on those smaller projects.
Yeah, and really, so the solo K, the one that this will benefit the most really isn't as much for the borrowers, the people actually doing rehabs and things like that.
Right.
That would be the real benefit to this one. I'd have to check on the realtor thing. That's an interesting one.
Oh, yes, it is.
But anyways, again, seek advice. We wanted to make you aware of these tools. 3 years ago, I knew nothing about this. I knew nothing about it. And they are powerful tools that you're not going to hear about in college. You're not going to hear about in high school. And financial advisors, they're great, right? They typically lead us down the same path that like a Vanguard would and so on.
Yep.
At least all the ones I talked to did. So these are options, and I think they're great options to explore.
Yep. And we'll go to the next slide, which is about the last slide. And, just want to talk about this, talking about private lending that you've done. You've got a project. I won't give too much detail on it, but you're getting 17% return on it. Talk about what you're doing in your retirement account. If you're listening to this, I'm positive you're not doing 17% right now. Plus some points on the other hand.
So we've gotten creative with some deals, and this was offered up to us. I didn't hold anybody's feet to the fire. Every now and then something great comes along. So yes, we did actually do it's basically a private money loan at 17% interest.
That's great.
But that's kind of off the charts. I don't know if I'll ever see that again.
Right. Don't expect it, but it can happen. These people needed it and they offered it.
So the bottom line with private money loans is it's completely negotiable.
Yep.
Okay. Complete. So if you're the rehabber, you want to find out what somebody's comfortable receiving. If it's 8% and they're happy with that, great. If you're the person that's lending the money, obviously you want to be at the higher end of the scale. It's not complicated.
Awesome. So we'll head to this last slide here. Do you want to touch on this and then we'll wrap it up?
So we wanted to spend some time on this, but I'm not going to. This is an outline for when you meet with someone. So if you're building that relationship that Dante talked about, getting engaged, getting married, this is really an outline for a suggested outline on how that discussion should go. So you ask somebody to meet for coffee. rapport building, right? The term we use is Ford. And I
Yep.
know there's a few other acronyms about it, right? Get to know them, family and friends, their occupation, talk about their job, find something in common with them, recreation, and then the last one is dreams. So just make sure you take the time to get to know them. It's going to go a long way in the discussion. Some of the highlights in here, the intent statement. The thing here is, I would set the stage and say, you came here because I asked you to, because we wanted to talk about this particular investment.
Yep.
And try to get a commitment from them. Say, look, I'm going to go through this with you as we discussed, but at the end, I'm going to ask you if this is something that you'd be interested in investing in. If you don't ask the question, and it's also better to prepare them by setting the table for asking that question at the end. If you don't ever ask the question, the answer is always going to be no.
Yeah.
So this is really a mindset thing to, with the intent statement and so on. So discovery of current investment goals, talk to them about it. The company overview is really what you're doing. If you're a rehabber, if you're a syndicator, tell them why you're a quality person. Tell them why their money is going to be secure. And that could be a whole other presentation on, buying at the right price and so on. Then you talk about your investment buying criteria. We touched upon this earlier. Get into terms and conditions. What's the money split if you're a syndicator? How does the cash flow? When did they get paid? How long the terms? If you're a rehabber, again, it's pretty simple. Interest, terms, how will the payments work? The documents you have to have in place. You do have a responsibility, again, SEC rules, to make sure people are aware of the risks. Very important. The closing process, again, if you're going to
talk about how it executes.
Yeah. So if you're a rehabber, basically, the bottom line is, if Dante loans me money, I'm never going to touch that money, right? That money is going to go into escrow. Somebody else is going to handle it. So I just can't take your money and run.
Yep.
And we talked about the common ways. So that was really the slide that we had just talked about, how people found. So give them some suggestions, give them time to ask some questions, and then again, close it out by asking for that commitment.
Yeah. So what we'll do next is we're going to go over any questions you guys have. So I'm going to put our contact info on the screen. I've got some questions in the chat, so I'm going to go over those. Chris, you said, okay, so how can I become a full-time real estate investor if the money generated from a rental property has to go back into it? So on the self-directed side, I was counting on that. Glad you guys gave me the heads up. So in the beginning, you can't, if you're, so how can I become a full-time real estate investor? So like we said, you can't do it on your own property if you're doing it in someone else's. It does have to go back into your account. Then
yeah, so I'm not sure the nature of the question. So if the idea is to build up your own funds by investing in your own property, there's a lot of risk there, right? Because if you botch the job and it's your money,
you got nothing.
Wow,
So double whammy.
So, part of that is to spread out risk. That's how it's typically done. But investing in somebody else's deal is a great way to do it. But using your retirement to build up money that you can have available before retirement age is not a sound strategy, in my opinion.
Right.
So, we talk about using other people's money, right? We talk about private money lending. If you rehab and do a private money loan and you make money, well, now you have some cash to work with.
Right.
If you wholesale, now you have some cash to work with. That's a way to do it, really, with using almost no money. So, we can talk more about that. We'd be happy to discuss with you. It's a great question, a fair question, but we do have to make sure we play by the rules.
Yeah. And then Brandon said,
can you scroll up a little bit? Sorry.
Brandon,
I think we missed one up there.
Yep. Right here.
Oh, it's Mr. Rivers.
Yep. The company
So
you
we
work
just
with is
got
fantastic.
an endorsement. Like I said, I work with Equity Trust. They've been good. There's a lot of great companies out there. Dave Ravis also works with them.
Yep. And then live off the property management fees and charge the LLC that holds the company the fees for the property management.
Mhm.
I don't know if you can do that. I would talk to your attorney possibly to see if that's allowed, or CPA or whoever would be able to give you some more insight on that. That's not a bad idea. That's it's a good strategy. Actually, you just got to make sure it's okay and they don't call your account due for your retirement account.
Yeah, so again, I think that one deserves a little bit more. That's a tricky scenario.
People get shifty on here, let me tell you. So again, if you guys have questions, put them in the chat or unmute yourself. Also, if you want to put in the chat, what topics do you guys want covered when we do these? What type of professionals do you want in here? Do you want attorneys? Do you want CPAs? Do you want property managers coming in and talking to you guys so you can ask them questions?
Yeah, so we got Makar,
Macher, Mocker, I don't know.
So anyway, you can keep buying more properties, but you cannot use those funds. So I think what they're getting at is if you invest in properties using your IRA, you're gonna, get proceeds from that property, and hopefully eventually you pay it off. A little bit longer term strategy, but you can use that money to buy more properties, right? You just can't use those funds unless you want to take it out and pay taxes. That's the other option, right? Cash out your retirement. Again, I'm not recommending that, but cash it out and try to build your wealth that way. That is a way you can use retirement funds. You just gotta
some good returns there to eat that tax up.
You got to pay Uncle Sam. Now, there is one other thing I will add, and that is there is a strategy I was made aware of. Let's say you want to buy 5 single family homes with your retirement. Instead of paying all those homes, you can't use that money, right? Whatever cash flow you have come in, you can't use it until you retire. So the idea is if you start this when you're younger, and let's say you have 5 houses, and they're all cash flowing, they're all making you, a nice profit. The idea is if you have 30-year mortgages on them, you don't wait 30 years to pay off all those mortgages. What you do is you focus on paying one of those homes off. And then once that home is paid off from the proceeds of the other 4 homes, or the cash flow from the other 4 homes, you then begin to use the full amount of cash flow that you're getting without a mortgage payment on house number 1, plus the other 4 homes to now pay off home number 2. And it starts to snowball. It'll take you 4 or 5 years to pay off house number 1, but house number 2 gets paid off in like 2.5 years.
Right.
And house number 3 gets paid off in like 1.5 years, and so on. And all of a sudden you own 5 homes free and clear. That's a pretty powerful strategy.
And not to talk about getting lines of credit on those homes that are paid off.
Right.
Now, today's market, we've got a seller's market. If you're buying real estate right now or watching real estate, things are going quick, over asking, no contingencies, and sometimes even cash. So you have to look super aggressive. So that strategy you're just talking about, let's get a line on credit on some of these bad boys. Yep. Then let's start putting some cash offers in on properties, be super aggressive, grab them. Now you can use the rent from all those properties to pay off your lines of credit, or even refinance the one you bought in cash and you use the money that way. There's endless strategies you can use
so
with this.
The one piece of advice I'll give everybody comes from my own experience, and there's a lot you can do. We've talked about a lot here. There's a lot you can do with real estate. The best thing that I can say from our end, wrapping this up, is pick a direction. What I appreciate about Dante is he was a car sales guy. He was very successful, but he said, I don't like that for these reasons.
Right.
And he went into real estate and he started selling homes, and he's done really good at that. And then he said, you know what, there's something better out here. I want to be an investor. So he starts buying some investment properties, duplexes and so on. And he says, boy, I'm getting a lot of calls on these things.
Yeah. Better start cashing them out.
And how can I accelerate this? So what I appreciate about him is, he never settles for less. He has that drive, and now he's on to the syndication piece. I'm not saying that's for everyone. I think the point is here, when you're focused on something, he's a young guy. He's done really well at a really young age because of the focus. So pick your direction and run with it is the best piece of advice I can give you.
Yep, that's great. And also some tools, just kind of touch on what we're talking about today. If you enjoy reading some good books that we've covered, this is actually one of our attorneys that we use. Basically, it's how to legally raise private capital. So that's pretty good. It leans more towards the syndication realm of things, but it still tells you the do's and don'ts. Raising capital for real estate. This is a great book as well. They're all on Amazon. That's going to tell you a little bit. And then a really good one that covers literally everything we talked about is, Raising Private Capital by Matt Faircloth. It's a bigger pockets book, super tiny. You can read it in an evening if you really sit down and get after it. Yeah. So those are some great tools. Some more questions you have. If you want access to returns, use cash, of course. Not an RA or SOL K. We've used both. So we're earning returns we can live off of, and banking on more in retirement. So again, that comes to portfolio diversification, using
Absolutely.
your retirement, using your cash.
And making sure you know how to use the funds appropriately.
Yep. With current market, the deals are harder to find, especially for new to real estate investing, especially in Syracuse with the eviction situation going and such. Maureen, that's super true. You know, I'm not going to, you know, say everything's nice and dandy and roses, whatnot. But well, there's deals out there. You just got to find them. I mean, I have access to a lot of off-market stuff I give my investors, and they're good deals. And that's, you know,
network, continue to network.
Yeah.
Continue to build relationships and market, right? Social media is a powerful marketing tool.
Yep.
So educate yourself on some of the social media aspects of how you can get yourself out there more. If you continue to market, if you make a lot of offers, right? That's my other thing that I understand is you got to be out there making an offer. You're only writing one offer a week.
Right. That's the issue.
You're going to have it's
We're
a
putting
numbers
our
game.
eyes out, you know, on properties.
It's a numbers game. So I would just encourage you to do that. Dante, can you speak a minute about what's?
Well, we're going to do the one right before that. We'll just go in order.
Okay. Oh, I'm sorry.
Is there
It's scrolling fast?
I know. Is there a minimum amount to invest in a syndication, or is that up to the group you invest with? So, Brian, to answer your question, it is up to us. Typically, you'll see across the board, it's a $25,000 or $50,000 minimum investment on these syndications. Reason being is we're not going to put $5,000 out there for the minimum and spin our wheels trying to raise $1 million on these deals. I mean, if you're raising $5,000 from each individual person, you'll be raising money for you. You won't do it, is what I'm getting at.
Yeah, and part of it is returns need to be managed, tax statements need to be provided.
It's a lot of work.
So what it does is it minimizes the number of investors, and just make sure you kind of have a focused, efficient effort relative to the syndication. The other thing that we do is we'll make sure that we hold quarterly calls.
Yep.
And that's the really cool thing for me in syndications is I get to participate. Like I have the people that own the property tell me what exactly is going on. I know exactly with the syndications I've invested in, what's going on with COVID. How has that impacted them? What does that mean for me in terms of my returns?
Yep.
It's a really cool thing. You know, if I invest in a mutual fund, I don't have the opportunity to talk to all those companies. In fact, I don't have the opportunity to talk to one, and they really don't care.
Right. Yeah.
Right.
And to touch on that, Brian, you know, 25, 50,000, the minimum is pretty standard. 25 is for more of a smaller deal, like right above $1 million, or 50,000. I mean, there's some deals out there, they do $100,000 minimum all the way up to, you know, I mean, some syndicators even do $500,000 minimum, but you're talking bigger deals, more, I don't want to say institutional investors, but the big guys that have capital available. Dante,
we missed one up here. Sorry.
No, that's fine.
We did that one. Keep going.
Yep.
up.
That's the diversification one. I think we got that one.
Okay.
That's Dave
All right,
Rivers.
sorry.
Yep. Can you talk about a minute about the syndications you're working on? So the reason why I flew down to the Carolinas for a week is because we've had 15 meetings throughout the week. Meeting with brokers, investors, other syndicators, and touring properties. So we've got 5 more tours this week that we're going to be going on, looking at potential property, because we were looking at one, it wasn't working out.
Right.
So we actually kind of stepped away from that one, and now we're looking at new options. So we're going to be, I mean, even if you guys down in the Carolinas, we've been in Charlotte a lot this week. We're heading in the car. We're going to be in Winston-Salem and Greensboro. We've got some walkthroughs there. Heading over to Capital Raleigh and then Durham as well. So
the bottom line is we like the Carolinas.
Oh yeah, they're great markets.
We did market research.
Someone raised their hand. Yep.
Yeah. We did market research up and down the East Coast.
And it happened to, yeah.
We like the Carolinas. The original thought was we'd invest in Syracuse because of some of Dante's relationships there. When we looked at the market data, we're like, you know what? The Carolinas are the right place to be. Southeast is hot.
Not that Syracuse is doing bad for any of you guys in Syracuse.
I'm a Syracuse guy. I love Syracuse. I still bleed orange and blue, right?
But those smaller deals are good there. The
Absolutely.
larger ones just don't make sense for what we're looking at.
So what we're looking for are really mid-sized market properties. So we're looking in areas like Greensboro, Winston-Salem.
Secondary markets.
Charlotte's like pretty saturated right now and has a lot of new builds going on.
Yeah.
A lot of new inventory coming in, right? Growing like crazy.
I'll shock all the Syracuse people. You know, stuff's trading at sub 4% cap rates over here. So where in Syracuse, you're used to locking down a property at 8, 9, 10, even 11% cap rate with 20% cash on cash return possibly. I mean, that
Yeah, so
dreams here.
Right. And think of cap rate as a return on your investment.
Yep.
Right. So
If it was a cash purchase.
it affects the sales price. So lower cap, higher price.
Yep.
Charlotte's down in the 4s, some of it sub 4s. I think we even heard a number of 2 and change the other day.
Correct. An off market deal that traded.
So we're looking in these mid-sized markets that a lot of people are moving to, a lot of people moving to the South. We're looking for properties that, you know, aren't 50 years old, that they're more like maybe 20, 30 years old, a little bit dated. They have to be cash flowing.
Yep. From day one, we got investors that need to get paid.
If somebody's going to invest with us from day one, we want to make sure that there's cash there to put right back in their pocket so we can show them that we're sincere. We're going to have an excellent business plan. And the idea is with these syndications that as we improve the bottom line, we improve it by being able to increase rents. We do that through some renovations and being smart about how we manage it.
Yep.
The price of an apartment building, of a self-storage facility, whatever it is that you're investing in the commercial world is directly related to how much money that property makes.
Correct. It doesn't, I mean, condition matters, but it really doesn't in the sense of where it values. It's 100% investment. And the cool thing I like about syndication is I view it like this. So here's your initial investment in the syndication. That investment that you put in, let's say 50,000, that's going to stay with that investment to the life of it. So it's going to grow this way. Every month you're getting distributions from cash flow. That money is now going in this direction, and you have it back in your pocket tangibly if it's not through a retirement account, and go invest that somewhere else. If you want to put money in a syndication, let that keep riding the syndication for when it sells in 3 to 7 years. You also have this cash flow you're getting each month that you can go throw in a duplex if you want to diversify, go throw it in another market, throw it in Bitcoin. I don't care at that point. It's yours to do with once we give it to you and distribute it to you. As an investor, you can invest anywhere. We're invested across several states. That's very true. You know, diversification.
Sure.
You're in
diversification of areas.
Chicago, Charlotte, Austin, Dallas, correct? Yep. So I mean, you're in some pretty good markets across the country.
Right.
All areas really so far. Charlotte is good. Dallas is good. He's speaking to it. Yes, we are. You know, Austin, Dallas seems like a very overheated market. I have some buddies who have apartment communities down there, and you know they're trading at that 3% cap rate as well. It's tough to find a deal. It's very saturated there. A lot of people are moving there from California, which is good for them. We're getting a lot of people from the Northeast coming down this way, which is good for us.
Yep.
And like we mentioned, that 3% cap rate or sub 3%, that was over in, right in Charlotte.
Right.
But if we're looking in those secondary markets in the Winston, Greensboro, Raleigh, Durham, we're seeing more of that 4 to 6%, which makes a little more sense, and that's why we're there. But we're not competing with the big guys.
Just like the person that said earlier, hey, it's hard to get get a property, right, for rehab, or if you're going to burr it, you got to put in the work. You got to put in the work. You got to build the relationships. We're committed to doing that.
Yep,
and,
most definitely.
Certainly from a marketing standpoint. So the real estate's a cool world. For everybody that's in it, go out there and kill it. And
any other questions from you guys? Do you want to unmute yourself, put it in the chat, or any other topics you'd like to hear? Please go right ahead. We'd love to hear from you.
Or if you want to connect everyone, we'll make the connection.
Yep.
Yep.
Anyone? Are we all good?
All right. We've successfully worn them out. I think it was all the 506.
I know, all the 506 B, C. So thank you guys for coming. We'll send out emails and everything for our next meetup. I think we just had a question come through. Nope. Thank you for the info. Again, our contact info should still be on the screen if I'm sharing. You got my cell phone and email. Feel free to call or text. You got DJs as well. We love chatting with you guys, connecting with you. We also love educating anyone. We've done a lot. You've done a lot on the passive side recently.
Thank you for taking the time.
Yeah,
and to share and this is how it's done in real estate. So we really appreciate it.
Yeah. So I'm even thinking about doing one of these. I've had a lot of questions, Airbnb. So my wife and I, we ran an Airbnb in Syracuse for a little bit. It did really well. I've had lots of questions about that. So maybe we'll do a topic on that.
Absolutely.
Quick story about that. We were at 98% occupancy in one of our units. And then March hit, COVID, and we had 3 months after that booked out fully, and they all canceled right as COVID hit. I mean, everyone stopped traveling, everyone canceled. I was pretty nervous because it was out of a duplex. So one unit was vacant and the other unit was rented. So it covered a majority of my expenses, but not all of them. And so what we did was, we pivoted to the market. We said, okay, let's drop our price by 40% a night. I mean, that's a lot. 40%. That's a decent chunk. And what that actually did was we had a lot of traveling nurses and people that were still working or honestly just wanted to get out of their home.
Right.
And we were 100% booked. I mean, every single night from March until we closed down the Airbnb, because I was doing different things, we were 100% booked, and it was phenomenal. The only phenomenal part was my wife having to go over to change the sheets and clean the place every time. But, we use the cleaning fee as income as well. So if you guys are curious about Airbnb as well, feel free to reach out to me. I'd love to help you with that. It's a great investment, COVID or not. People are doing really well with them if you're doing it right. And it's very easy to do well in Airbnb because it's all about that presentation of the property. I mean, we had professional photos and we were #1 in Syracuse every time you look us up. So that was great. So again, thank you guys. Just going to check, what is the best way to ask for a loan through credit unions or hard capital, personal/signature loans? So credit unions are great. I got a blog post coming out talking about how to get loans through credit unions or what they're usually looking for. Credit unions is about relationships. So credit unions are going to be to your local niche. I had an individual speak in one of our meetups that was in a credit union. And I just built that relationship. Even at the age of 20, I was still able to get a commercial loan through a credit union because I built that relationship and I was able to kind of prove to them that I know what I'm doing. I've executed a few times and they ended up loaning to me. So that's for credit unions. Hard capital. It's expensive. It really is. I don't suggest doing it for your first deal because you might lose out. There's a lot of fees and you have to have experience to know how to pivot when the market changes.
If I had to do a hard money loan, the first place I'd go is social media, real estate investing network.
Figure out who's good in the
I
market.
put it out there and say, hey, who's done well, get some references and get some feedback that way in terms of hard money. Because you're going to want a lot of references and again, understand the full picture of what it is that they're going to be charging you.
You're right. And Gavin asked a question here. Not sure if I'm asking this correctly as I am not very familiar with REITs, real estate investment trusts yet. So he's getting educated. That's great. Are any of the syndications that Victory Capital Group does a part of REITs? So no, we do not plan on being with REITs. I don't think ever. We haven't had that discussion, but REITs are publicly traded. So they're huge. They're, multi-billion-dollar cap companies that you're going to invest in with Vanguard.
Hopefully we can sell to them.
Right. Exactly. Yeah. So we are not on any of that. We are way too small for that and happily very small for that.
Yeah. And the way I like to explain this is the groups that we're pulling together, it's like all of us are together on, say an apartment building. That's what we're focused on. Hopefully that building is providing great returns. We're managing it. And again, you get to understand and look under the hood on everything that's going on with it.
Right. Not physically managing. We got property manager, professional property manager.
Understood.
But managing the investment.
Managing, yes, I probably shouldn't confuse the managing.
Right.
terms.
Right.
So,
Asset versus property.
But it's pretty cool to be a part of a group that pulls together for a common purpose like that. And that's really the definition of a syndication.
Yeah. And then anyone know anyone who would give a secured line of credit against equity in a commercial deal? I just start going around. First, I'd start going to the property out, look for credit unions or local banks, regional banks.
They'd be your best bet.
Yeah, grow relationships with them. They're most likely glad to do it because it's right in their backyard. They can drive by the property every day to the office, the lender that is.
Right.
Check it out. Access a line of credit, or maybe if you do have a lot of equity, possibly refinance it. Rates are super low right now. Why not lock it in for 5 to 10 years, depending on who you're going with for that commercial loan.
And in terms of how they protect that, in terms of guarantees and things like that, I haven't done it, so I don't know exactly how they view that, but they're probably going to want to look at like personal financial statement in addition to all the business stuff. So you just really, it's going to depend on, the lending institution's terms. You just got to make phone calls, beat the pavement and get the answer.
Most definitely. So, all right, we're at the hour and a half mark, so we'll let everyone go. We thank you for coming by. We hope you guys were able to take away a nugget or two. If you have any questions for us, give us a shout and we will see you next month.
Awesome. Thank you, everyone.